Hey everybody, it's Trendy John here at Simpler Trading. Let's go ahead and knock out the broad market analysis. We'll be covering the 17th of August, 2025 into the 22nd. The first thing that we're going to be looking at is going to be this week's major U.S. economic reports and Fed speakers. Why do we like this, or why do we pay attention to it? Because it can cause volatility in the market. One thing that I love about Trendy Trading is that Melissa and I, we just don't sit on our hands. We actually take action. And this stuff right here, if it's volatile enough, just pushes price into the levels that we're already speaking about in the room. So I love volatility. I hope you love volatility. Let's see what's on the list. As far as Monday is concerned, we have Home Builder Confidence Index. That's not very volatile. Tuesday coming in, housing starts and building permits. Wednesday, minutes from the Federal Reserve July FOMC meeting. Even though these are meeting minutes, they can cause volatility. So far, Wednesday is looking like a potential day where we can see some volatility. Thursday, August 21st, initial jobless claims, and then we have the Fed Manufacturing Survey, S&P Flash US PMI. So Thursday looks pretty good. We could get some volatility first thing in the morning. And then Friday, we have nothing scheduled. In summary, what I'm noticing so far this week is that this list is really, really small, and there's not a whole lot going on. Okay. The next thing that we are going to be looking at for this week's broad market analysis, we're going to get into earnings. And the reason why earnings are important, well, you guessed it. I mean, really, at the end of the day, you want to be aware, right, if you have any sort of earnings coming up. Okay. So, what are we looking at as far as this week is concerned? I'm going to pull this down really fast. And you can see, just like the U.S. economic data that's coming out this week, there's not a whole lot going on. But there are a couple names in here that are important for me, and that is going to be Home Depot. I'm actually in a position here. We have leaps, or I have leaps that the more important ones, the higher deltas, those have gone from 25 all the way up into about $42 a contract. They did come back a little bit, and it's important, right? Because those are really expensive contracts, and this obviously can have some kind of impact on the price of those contracts. So for me personally, in my account, I'm most likely going to hedge this. I'll be looking for a level tomorrow that in the event that, Home Depot were to pull back, I'm going to find that level and most likely buy some put debits around it. I may just buy straight up puts. It kind of depends. Okay. So that's one thing I take from this earnings calendar that I'm looking at. As I move down, I'm looking for other names that I might potentially be interested in trading, whether it's going to be into earnings or waiting after, and that would be Target. And then Estee Lauder, I actually like this name as well. And then TJ Maxx, I like this name. Baidu, or is this Baidu? Give me one second. Yes, that is Baidu. And then moving on over, of course, Walmart, and then Workday, Intuit, and then one of my other favorites, Ross. So Ross and TJ Maxx, I always love to see how they're doing. I need to take a look at the chart, but in the economy where everyone feels like things are really expensive, I feel like these guys are great go-tos. So definitely interested in see how they do. The next thing that we're going to be looking at is going to be the SPY. And I like to start off with the bigger picture. And when I say the bigger picture, I really mean it. I like to look at the quarterly chart, and each candle represents one quarter. Right now, we have about 1 month and 14 days before this candle actually closes. So everything that I'm speaking about is really important, and you understanding that it could take a lot longer before we know what this candle is going to look like before the end of this quarter. Okay, so again, 1 month, 14 days to go. I got some quick notes on here. Last week, I was looking for an all-time high because of the certain strategy that I use here, and I explained that in last week's video. So if you're interested, please go back and watch that. But we hit that high as forecasted, so I'm happy about that. You'll notice a new high was established, which means our fibs basically went up just a little bit more, and that changes the coefficients, if you will, or the numbers that are associated with those coefficients. Take note that the 9 EMA is confluent with the golden pocket. So what do I mean by that? See this 9 EMA, what we do know on a quarterly chart when we come back to here is typically a good place for me to try to get positioned a little bit bigger for a move up. It doesn't necessarily mean I'm going to jump in the SPY. It could mean that if we were to dump into there, that I'd be buying other names that I'm really interested in the market. But in this case, what I mean by golden pocket, we take the 50 and the 618, and that is the area. And you can see it aligns with the 9 EMA. It aligns with this really strong candle. So I love the confluence there. I'm not saying that we're coming back to there. I'm just noting it because we still have 1 month and 14 days. Let's go ahead and move on into the weekly. Now, the weekly is important for a lot of traders because at the end of the day, you're just trying to take it a week by week basis and see, hey, what can I do as far as this week is concerned? Well, I have some extension targets here. I use Fibonacci extension to get those. It's a possibility if we were to continue up, 654 by 672 is possible. And then underneath here, I'm looking at an inside and up formation. This is a formation that helps me understand that we could see further continuation to the upside because we are creating buyers in this buy zone, if you will. Okay. So what I mean is we could look at this as a buy zone right in here. So if prices were to come back here, I like that the 9 EMA is confluent. And I'm going to show you something on the Nasdaq a little bit later, or the Qs. Actually, the Nasdaq towards the end of this to show you why I think we could be opening up into a gap up tonight. There are also a couple things that tell me, hey, we just need to be neutral until we get some confirmation. But a lot of interesting confluence to help me understand that we could see continuation up here. Now, besides the inside and up formation, what's really neat about this is that your 9 EMA on the weekly is confluent with the inside and up formation, but also what we call the bullish channel, which is 23 by 38.2% of the Fibonacci, or the range that I have measured with Fibonacci's. Okay. The next thing to take into consideration is 3 white soldiers. It's a formation. If you look it up under, stock formations or candle formations, what it means is that you just get basic moves like this. So you have 2, and then you'll have another one like this. So 3 white soldiers, just like that. And we have 1, 2, and then it could be 3. Okay. The over under, all I'm saying here on the 637.18 is where we started the inside and up formation, and anything under there, I would be a bit cautious. As far as the weekly is concerned, it's looking pretty good, and I have noted that there is a gap down here. And also this area right here where it says trendy yearly edge, big area of support. If we were to get down to there, I'd definitely be interested for a nice buy as well. That is SPY, and overall, my overall sentiment is I am bullish, especially on buying dips. I personally would like to see the market come in just a little bit more before we continue to press the gas here. But as you can see, it's very resilient and is having a hard time going down. Let's go ahead and move on to our next ticker, which is going to be the Qs. And same thing here, I want to go into the quarterly. So let's take a look there. All right, so this is the quarterly, and I'm sorry, we have lines all over the place, but we have fib extensions. We've hit a couple numbers. Also, we made a new high on the weekly. We know that, and that's what we were forecasting as well. As far as this week goes, price has made a new high. Fibs change 1 month and 14 days until the quarter candle closes. Note that the 9 EMA on the quarterly is now confluent with the golden pocket. So measuring from this huge dip to the high, our golden pocket, which lies right into this area here, is confluent with the 9 EMA. I'm not saying we're going to hit this. I'm just saying at the moment where we are measuring that this is confluent with the 9 EMA. And I love in a bullish market when prices come back towards the 9 EMA. That's where I want to be looking at getting long. And when I say getting long, folks, it doesn't mean I'm sitting here waiting for this price. This just means I am net long now. But if for some reason we were to come back there, this is where I get really interested in laying into my positions and putting more allocation in. Okay. Let's go ahead and move on. We're going to go to the weekly. The weekly is looking pretty good. It's a little bit different than the SPY. It is not an inside and up formation. It is a continuation here. And the same thing, we could see 3 white soldiers. So just take note of that. And when I say it's not an inside and up, notice here that this candle was pretty bullish. whereas the SPY was looking more like an inside and up formation. This is just continuation as well. And the 9 EMA on the weekly is confluent with this zone in here, which is some support. And then we have a bull channel down here between 540 and 514. Personally, again, it doesn't matter about what I want, but I do, if we were to get the pullback, this is where I'd be looking at buying in here, okay, short term. So my overall, how I'm feeling about my overall sentiment in the QQQ is I'm a little bit more neutral because of the topping wick, but I'm going to show you something on the Nasdaq futures that makes me feel like we could see a bounce tonight on the open. I said could. We'll be interested to see if we do see it. But if it doesn't bounce on the open tonight, there is an area where I want to try and get long, and I'll go over that with you here shortly. So far as this goes, everything's looking great, guys. We note that we have a gap fill that's down here around the golden pocket as well. On the daily, we notice that the 9 EMA is confluent with some support. Everything looks really, really good. Let's go ahead and move on. The next chart that I'm going to be looking at is the dollar. So I'm going to type in here, I believe it's $DXY. And then I like to use this one right here, IFUS, ICE US dollar. Boom. Let's go ahead and click on that. I told you last week that this could give us clues into the direction of the market. The market was strong. You'll notice that the bear channel did work. And I told you last week, in most cases, when the dollar is breaking down, I'm looking for the market to move up as long as things in the market are showing that we could go up. And that's exactly what we were looking for. What's neat about this past week is the bear channel played out on the dollar and the market did move up, but also that we created an inside and down formation here. And what I'm telling you and going into this week, as long as we stay below 98.20, there's a possibility that the market continues up. The 98.20 level for me is an over under on the dollar. And if we were to get above that, I want to be checking out and seeing if the market is starting to go sideways to down. Notice that I have an alert right in this area. So again, it's cluing me in. If I get alerted, I notice that the dollar is now starting to move back up. And if the dollar decides to kind of trick us and then move quickly to the upside, then I know that this is going to be resistance again in here. And if the market were to go down, I'd expect the dollar to reject here, and then that the market would go up once it comes back down, once it hits in this area, I would expect the market to come back up. Okay. So again, big level there for me, 98.20. Market could continue to go down until the dollar reaches 99.5 to say 100. And as long as we're staying under 98.20, I'm looking for the market to continue up, and the dollar could come all the way back down to around 96.87. That is the dollar. Let's go ahead and move on now into the TNX, which is your 10-year Treasury. And what I'm looking for here is the same thing I've been looking for the entire year. Basically, let's keep it at this. If, for some reason the TNX gets above the red zone, I'll be concerned. And as long as we're in the middle, there's not much to report on. And if prices on the TNX were to get down to the green zone or 3.8, then I would take note as well. Overall, you can see it's just trading in between these two zones there. And so there's not a whole lot to report on that. All right, so the next thing that we're going to look at is going to be the skew. Let's go ahead and type that in over here on Thinkorswim. All right, so here's the skew. You want to look at this on a weekly, not a daily, not a 4-hour, nothing like that. And I have basically some zones here. And the way that this works is when the skew were to rise to in here, we want to be risk off and or being cautious, just understanding that the market could pull back. And this is where our hedge funds believe also they want to be hedged or have that insurance on. Looking down here on this green zone, these are the zones that I put together. And again, guys, this is just my opinion. These levels work and help me a lot. If prices were to get down into here, you'll notice that I have this little line that says risk on for 5 days. So this is usually if the skew comes into here and all is matching up on my other charts, I want to go ahead and be long and risk on for at least the next 5 days. And if for some reason the skew were to come all the way down to this level, that means things are getting pretty ugly out there and there's a lot of fear coming in the market. And then I start to think that, hey, let me go ahead and buy that fear as long as my charts are matching up. And then I'm buying at least 30 plus days in the market for the long side. Okay. So that is the skew for this week. And quite frankly, after last week, it hasn't done a whole lot, which tells me that the market could continue to be resilient and continue to move up. The next thing that we're going to be looking at is the fear and greed. It is at, let me pull this down here real quick. It is at fear and greed index is at 64. I believe it was at 59 last week. So it also has not ticked up very much, which tells me that there's still a lot of room to move to the extreme greed side if it wants to. So if you feel like the market is overbought, you could be wrong. Once again, a lot of people I feel like are thinking it's overbought and the market just keeps going up. So anyways, let's go ahead and move on. We're going to look at the futures, and I love to use ES futures, and we look at it every single day. I love to trade the futures almost every single day. It really helps me to adjust my portfolio. So I really concentrate on the ES and the Nasdaq. Over here on the ES futures, we have an inside and a formation. We'll notice that it could also turn into 3 white soldiers if it wants to. We have support at 64.41. And then I have targets on extensions to the upside after we hit that round number of 65.36 by 65.7 and possibly 6600. To the downside, if we break down below that support, we could see prices move on down towards this mid-level around 63.51. And if things get really shaky, we could come back towards the 9 EMA, which is around 6,300. Let's go ahead and move on into the daily. We're going to do a top-down approach. I like to talk about cycles. So after 3 days, typically 1 to 2 days sideways to down. And when we have 2 to 3 days to the downside, we usually see 1 to 2 sideways, and then back to the upside, especially when things are like this, extremely bullish. So what do I mean by that? You'll notice here, 1, 2, 3 up, 1 down day. So all I'm saying is 1 up, 2 up, 3 up, and on that next day, we typically go inside. This can sometimes just lead to consolidation, but also sometimes to the downside. So just be cautious here, and I would say your resistance comes in at 64.94. I have a couple buy triggers here for myself. It doesn't mean that I just close my eyes and take a trade here. It means that I look at a couple other small things that we teach you in the room to say whether or not I want to get long there. So these are my trigger longs. This is my resistance. You'll notice I don't have any supply above or any kind of red box, and that's because overall it's looking really bullish. So I'm still in this mentality of buying the dip, but only at levels. Okay, my overall sentiment, overall bullish on the week as long as price holds above 64.25. Listen to me, on the week, but cautious as long as price is below 64.95. Okay, so basically I'm looking to buy the dip, but I'm also understanding we're sideways to possible down at the moment. So just keep that in mind. And I'll show you that here on the weekly edges. So this is a weekly edge here. It's hard to see because I have this yellow banner in the way, but I have an edge right here. Okay, and as long as we're under that, remember that means I'm temporary cautious sideways to down, and I'm looking to buy the dip at levels. Okay, let's do Control Z and put that back up, and then you'll notice that the bottom yellow edge is down here. Now, one thing we want to note is that our ranges are actually really small this week compared to some of the other weeks. They're only about 100 points wide, so it is possible we could see both sides of the edges this week. So what I mean is we could come down here, hit this edge, reclaim this edge, and come all the way back up to that edge, and then we just kind of have a sideways week. Okay, let's go ahead and hit Control Z, put that back. We're going to now move on to the 4-hour. This is what it looks like. There's no zones on here, but I really want to show you that the distance between the edges considerably shrunk. Maybe we get to see the bottom edge for once about 100 points. Now, I say 100 points. I'm not talking about 100 points from here. I'm just saying between this top and this lower is about 100 points. It did break down underneath the cloud here on the 2-hour. Let's go to the 4-hour because that's what I said. And we have, this inside and down formation here. We have the upper weekly edge, so this is resistance. Down here, we have the lower weekly edge. We have an inside and up formation here, which is going to be support. So again, resistance, support. We're kind of in the middle. Don't diddle in the middle. My overall thought, unless we get some kind of extreme move overnight when we open up today at 5 o'clock Central, is that we're just kind of choppy, possibly on Monday, and maybe see some kind of rollover or push back to the upside on Tuesday, Wednesday timeframe. Okay. Let's go ahead and move on. We're going to now look at the Nasdaq. And like I said, I love to concentrate on the ES and the Nasdaq futures. And right over here, we have the Nasdaq. We want to be looking at the weekly. So again, top down. This one was not an inside and up, like I said, on the ES futures. This is more of an indecision candle, even though we did make the high as forecasted. Prices did come back. And so my overall sentiment here is that I'm going to be a little bit more on the neutral side. Okay, so I'm going to stay neutral just like the candle. All right, we got this top and wick. It's not overall, we didn't close bullish. We didn't close bearish. But a couple things to note on the weekly. We did hit our a couple extension targets up here, but also that the 9 EMA is confluent with this big move out, and we have a little zone here. So prices were to come back to here. This is where I look at buyers showing up on the Nasdaq futures. Let's go ahead and move to the daily. Now, this is where I was thinking if any chart today tells me we could gap up, say in the Nasdaq, or I do have a plan if we were to gap down. But I want to show you, remember I was talking about cycles? Well, the Nasdaq, unlike the ES futures, actually had 3 days down. And typically in a strong environment to the upside, that 2 to 3 days down is followed by a bounce play. Now, what does that mean? Does it mean we have to open up with a gap up? Heck no. Because when we zoom in here and really pay attention, we have a 9 EMA here. We have a trendy edge here on the monthly. We have a trendy edge here on the weekly. We have an inside and up formation on the daily. There is so much confluence here. So if we were to gap down tonight, my play is to try and go long here in this area, obviously with risk controls. And I would be trying to buy that dip to see if we get a move up. One disclaimer here. Let's say that we were to get like a really big dip and it looked like this and it came down. I would not, and this is great for the trendy members here, I would not get interested on the long unless we reclaimed above one of these edges. Then I'm looking to take that up. When I look at it from here, I think, hey, this is like, a zone that we could put on here to understand that resistance is here. And let's just say we bounced in this area. It makes me feel like it's really tight. And remember, I was saying coming into the week, things just look tighter. I mean, your macroeconomic calendar, not much going on. Makes me feel like chopped to boring. The next thing, we've hit new highs. We're coming off of a week where we hit new highs. The next thing is that earnings is getting it's not as exciting as it was, right? And so there's a little bit of possible price discovery, a possible sideways action. And then we have the edges saying, hey, our distance between the top edge and the bottom edge are not as wide as they usually are, which also indicates we could be seeing a little bit of choppy conditions. Now, that doesn't mean it's not going to be fun. It just means that's what I'm seeing right now, and it's a possibility. Let's go ahead and move on to the 4-hour. And just like the ES futures, we got an upper weekly edge here that is confluent with some, sellers. You guys can see that. And then down here, the lower weekly edges confluent with some buyers. Once again, looking pretty tight if you ask me. But so my overall sentiment, again, is going to be neutral. The next thing that I want to end with tonight is going to be Bitcoin. I was looking for 121,000 last week. We definitely hit that. We actually got up towards 125 before selling off almost 8,000 points here. I have not looked at Bitcoin on my Robinhood account, but it did come in after a very nice successful push to 125. But no one ever really likes a topping wick. Topping wicks usually indicate that we're going to see more down pressure, but overall it's bullish. So more down pressure possibly on a rally, towards a 124.5 and then possibly back down. Overall, though, I don't want to overanalyze this. I'm in it for the big run. And so therefore, I am looking at the quarterly primarily. Just know that the 9 EMA is here on the weekly and it looks pretty good. On the quarterly, this is what I see, and it looks just like everything else that I'm looking at, is that we are possibly going to end the year. I'm not saying that this guy doesn't come down in the next 1 month, 14 days, but at the end of this quarter, I'm expecting this candle to have basically be an up candle, a continuation candle. And then by the end of the year, we could see something like this. Once again, 3 white soldiers. That's what we have. Okay. So there's your analysis for this week for the broad market analysis. Don't forget to give us a like. Make sure you subscribe, and we'll see you in the trendy room under simpler trading. It's only $7 for 30 days. Can't wait for you guys to join the best team out there. Have an amazing day. Bye.